Hello, dear friends. I am thrilled to welcome Pete Townsend to our show today. Pete, you are Managing Director at Techstars, which is the famous pre-seed VC and private equity firm. You lead their Web3 Accelerator program and work with multiple startup cohorts year-round. You're also an early-stage startup investor, advisor, and fellow podcaster with your podcast, Money Never Sleeps. Welcome to Crypto Backstage, Pete.
Thank you, Alize. Great to be here. Really appreciate you asking me to join the show.
It's my pleasure. Pete, in this episode, I'd love to delve into the mechanics of your Web3 Accelerator program, which enters its third year and is probably one of the biggest accelerator program for Web3 in the world. We'd love to know, how you go about finding and selecting new teams, what's in it for them, how you onboard your world-class network of mentors and investors, essentially how the whole thing works. I'd love to also hear about Techstars' new investor thesis and Techstars 2.0, which launched this year. And finally, I saw that you recently joined the Association for Women in Cryptocurrencies Male Ally Pledge, which is to never speak again on a manel. So a manel is a panel where there are only men invited. So I'd love to discuss that and why it's important for you.
Sounds good, Alize. Really looking forward to having this chat.
Amazing. Why don't we start with maybe you tell us a little bit more about yourself and what you were doing before joining Techstars?
Yeah, absolutely. So I live in Ireland. I've been here for about 18 years. And as you can tell, I am not from Ireland. I still have my American accent that stuck with me, even though I was living in Dublin since 2006. But I was working for the French. I think I might have shared that with you in the past. I spent 10 years with BNP Paribas. So even though half the day that I was working with and speaking and engaging with people that had all different types of Irish accents, the other half of the day that I was speaking with people all over the world, including a lot of people in France. And so people's accents and the way they speak tend to be generated, or it tends to be created by whatever's going into their ears. And so my American accent stayed with me. Although when I do go back to Boston, that I have friends say to me, "Hey, nice accent, Pete." And I'm like, what are you talking about?
I can really, yeah, you're like, what?
Yeah, exactly. So I had a long career in traditional finance, stopping off at places like Fidelity Investments were the first 5 years of my career were, and then offshore with some hedge fund services in Bermuda, which was really the Wild West of hedge funds back in 2000, 2001. And then, like I mentioned, 10 years with BNP Paribas. And so it was a real multicultural, diverse environment there at BNP Paribas, which was really important in shaping kind of how I look at the world. And
but it wasn't too French in the culture.
It was really interesting because if you look at the other big institutional banks, obviously BNP Paribas have a big retail component as well, but I was part of the institutional side, and all the competitors came out of North America, came out of the US, and then they expanded to Europe and then the rest of the world. BNP Paribas started obviously in France, expanded over Europe, and then went to Asia and South America, and then went north to the US. So it was just the buildup of the scale getting to 200,000 people that meant that the culture of the business was different than the North American competitors. And so it was very deep in terms of building solutions and working with teams from all different cultures, or with people from all different cultures. And it really resulted in just again, an excellent experience and great solutions that we were able to build at the time.
Sounds like you had a great experience.
Great time. It was, but I had an incredibly frustrating one as well. Many, obviously, as you might imagine, they say working for a corporate, you hide your soul in your sock, and I did that for a long time. And there was elements of my personality in terms of what I really enjoyed doing that just, you could talk about it at the water cooler, but you just don't get to do those kinds of things day to day. But one of the big lessons learned was I was working on an acquisition of a unit of another institutional bank. And we got to the end of the acquisition and finally got to look under the hood, because they wouldn't let us look under the hood before we bought the business. And once they finally did, I was like, it's all the same. all of this financial market plumbing, no matter what you think in terms of the outer skin of a business and how they project themselves as being technology focused, it's all the same. And so this was back in 2014, and I had an experience where the biggest clients of the business that BNP Paribas were acquiring, that they came to Paris, where we went for the day to do what we call the dog and pony show, to show them all the wonderful toys of BNP Paribas and say, listen, we really want to bring the best client on board and make sure that they feel welcome and feel loved, because it's a critical part of the deal. If you're acquiring at a business, you need the biggest customer of that business to move over with you, right? It's not.
I love that. It's like even when you're selling something, you have the buyer attitude. So you show how it's like a mutual win-win situation.
Exactly. And so in Paris, the head of innovation for that unit of BNP Paribas that I was working for, they came along to the meeting and brought their 50-page deck. And because the customer was late, their flight was from London, was delayed, that they had to stop off at a different airport, and we sent them taxis or something like that. And while we were waiting, I'm flipping through this deck of the head of innovation, and around page 50, I see him mention some trends, some themes, and one of them was Bitcoin and the other one was blockchain. And I'm like, I obviously knew about Bitcoin at the time. This was 2014. Blockchain, I hadn't really heard much about. Obviously, I had been not necessarily a student of Bitcoin at that point in time, or student of crypto, and that I was just aware of it more from the fact of it being the famous Bitcoin pizza, where someone bought a pizza with one Bitcoin back, I don't know, 2011, 2012, something like that, right?
Exactly.
So once I saw blockchain, and that's I asked the head of innovation about that. He gave me a little bit of an overview, and I went down the rabbit hole, and I was fascinated. And my view was that if page 2 of the Bitcoin white paper, to me, looked like the panacea for the financial markets. Now, there's a very, very long story that goes along with that I won't get into today.
Okay.
But it was something where I saw, if this is how the technology can work for internet money, imagine how it could work for financial markets. And something just clicked, and I decided that I wanted to pursue that. It took another year or so of tracking what was going on in the industry, and some of the earliest players in what we were calling kind of enterprise blockchain back at the time, and just saw where it was all going. And I jumped in 2016 and I left, and I just knew that this is where things were headed for me, is that I was going to pursue a future in blockchain. It wasn't going to be on the builder side because I didn't have that itch to build something for product base. I wanted to invest, and that I found a way in 2016 that got me started. And
was that Coinbase?
No, well, that was one of the things on the journey, Alizé, is that
you tried multiple things.
Yeah, I set up a business. I set up my business in Oreo Ventures, and in 2017, I had an initial group that I was working with to get a venture fund launched, and it was an Ireland-focused fund across fintech, deep tech, cybersecurity, blockchain, a few different things. And probably about 3 months into the project, the lead investor pulled the plug and said they just weren't going to do it. And so,
why? It was too early?
Well, one, in hindsight, an Ireland-focused fund needs to be a lot more generalist. Okay. And it was one of the components. It was Ireland as one component, but also then looking across Europe into geographies like Berlin, Paris, Barcelona, and to build based on investing in founders in those jurisdictions as well as Ireland. But it was something where the anchor investor also had some other funds that they were launching, and they prioritized those funds over the fund that we would have worked on with them.
Okay.
And so I went through that same process a few more times over those first 5 years of running my business, Oreo Ventures, and that it was where all along the way, I thought, I need to get experience by working closely with founders. And so I just found a way. I found a way to build these relationships with founders and to be able to keep the money coming in by working with early stage startups is incredibly difficult, but I managed to do it. by piecing a few different things together. And I would help them. Basically, the tagline was, I help early stage startups get customers, build product, and raise investment, and would do the three of those things together. Because, you can't build a product without real customer insights on what they need, and you can't raise money without having true customer traction as well as a product to deliver to them. And so you had to be able to do the three together.
Yeah, for sure. Which sounds early at that time to have a real customer base, especially in Web3. So why did you want to be so close to these founders? Was it for accelerated learning, truly learning this industry from direct exposure to these projects?
It's because I knew that I was coming out of the corporate world and I
Yeah.
had no experience as a founder. So I founded my own business to do that, to have
Wow.
that empathy with them.
I
But
love
also then just to get the ideas, to get the experience, to see what worked with startups, to see what didn't work, to be able to contribute the experience that I had. I had a lot of experience on boards from my time at BNP Paribas. And so I ended up on a number of advisory boards and or board of directors, and all in the fintech, crypto, and blockchain space, and between 2016 to 2021, one of whom was Coinbase. And so this was a serendipitous happenstance. I had just come back from Chicago back in 2018, where I was helping a startup that I was working with at the time to do their fundraising tour in Chicago, and I had a few connections there.
Mm-hmm.
And I bumped into someone on the street in Dublin who I had done some work with in the past, and he said to me, Pete, tell me what's going on. Where have you been? I said, oh, just back from Chicago. I said, oh, what have you been doing there? I'm like, oh, it was crazy. I saw all the insides of all these different crypto commodity players. And that they were just all these traders that were working in crypto and trading crypto actively. It was amazing. He's like, oh, crypto. I said, yeah. He said, you ever hear of this company called, what they call Coinbasket? I said, he said, there's some kind of wallet or something. I said, you mean Coinbase? He's like, yeah, that's it. He's like, my so-and-so's sister's husband's cousin, as happens in Ireland, is looking for a director for the board of Coinbase. Would you like to connect with them? And I connected with them, and the rest is history. And I joined the board of Coinbase, their Irish subsidiary, in 2019.
Sounds like a dream.
Yeah,
you go to buy your bread or something in the weekend, and you get a seat as a director of the board in a large company.
Yeah. Well, I mean, and people always ask me about this, and they say, Pete, why are you on the board? I said, listen, it's a connection to my past, really, and my future. Is that in crypto now, it is quite regulated, right? Especially in Europe, that there are regulatory frameworks here that, depending upon the type of crypto services provider you are, you need different types of regulatory licensing and authorizations and registrations. And that, so my regulated past and regulated financial services, and now my present and future in crypto and Web3, it all fits together quite nicely. So
exactly.
That was 2018. And then I'd say for the rest of what happened after that, I had also been working on 3 other venture fund projects, none of which launched. So that was 4. And then in 2021, I started doing some mentoring with Techstars. I had met a guy called Martin Cass. Shout out to him. He was active in the Dublin startup ecosystem on the fintech side. And he had suggested to a guy called Kartik Varma, who was running the Techstars ABN AMRO Future of Finance program in Amsterdam at the time, and said, you guys should talk. Pete should probably be able to help as a mentor. And so I started talking to KV, as we called him, and he asked me to join as a mentor. I ended up mentoring Clarice Hagej from Defense, who are a fantastic crypto infrastructure provider in originally from France, but now based in New York City, and helped with a number of different things with the defense business, as well as one other founder I was just helping with product positioning. And I just really enjoyed it. I mean, coming into the Techstars ecosystem was really important for me. I had interviewed Chris Adelsbach back in 2018 for the Money Never Sleeps podcast. I had met a number of other Techstars folks along the way, like Eamon Carey. He used to run Techstars in London, and just had some good relationships there. And so when it came time to mentoring, was a no-brainer. And then after that, just through some more serendipitous connectivity, I was asked to lead the Web3 Accelerator. I'd been doing a lot of those kinds of things already. Along the way, I created this 10-week program to get founders into fighting shape for funding. And that, Techstars is a 13-week program. So it really, Techstars allowed me to scale. And so that was 2021 when I jumped in to get the first program off the ground.
Sounds like they quickly saw you as one of these super mentors that are, really going above and beyond for the projects they mentor. And that's what, then you move to leading their Web3 Accelerator.
Yeah. And working with founders firsthand, like I mentioned, is that it's inspiring. It's that you're working with people who have put everything on the line. They've quit their day job, that they totally believe in the singular vision, and they just have this need to see the world using their product, and that it is something that the world just needs. And so that really helps when you can, and I've seen plenty now in terms of number of deals and number of founders I've met and everything that comes across the desk, that you kind of know what to look for at this stage. But it is, when it comes down to the very basics of this, Alize, they're people. And when you're investing at the earliest stages, you're investing in people. You're not investing in products. And that sometimes the best people can make you want to invest in a terrible product, because that product.
Is that a good thing, though?
You know that product will never see the light of day.
But you believe the person will, iterate until they found the right product market fit. And yeah.
Exactly. We call it the purposefully picked pivot, right? And that where you invest in something knowing that you truly believe in the founders. They've got deep firsthand experience in the problem that they should be solving, not the problem they're trying to solve right now. And I've seen some of the craziest pivots happen within the first 2 weeks of an accelerator program that you would never imagine could have taken place.
Yeah. Let's dive in a sec. I think what you're saying is so true. So for the record, I had the honor of being invited to be a mentor last year on your program. And I was very, very much blown away by all the founders, the diversity of their backgrounds, their enthusiasm, their passion. And then when it comes to the time where, you want to, I wanted to find like one match, just also for capacity, etc., where I could really give value. And it's really down to indeed the personality, the vision they convey. And I was lucky enough to work a lot with Protico. They're doing a great job. So yeah,
they are.
It's been amazing. So maybe tell us, I think you said you can quickly see, what a strong founding team is going to be, and no matter the product. So tell us, what does that look like? So when you start selecting for your new cohort, which I think is launching in March, so in a few days, how do you, I guess you've refined your criteria, and I would love to hear what matters most for your program.
It's interesting. And I was encouraged recently with our criteria, which I'll share in a second, that is from Castle Island Ventures. They are a US-based VC in crypto and blockchain, and they have a great podcast called On the Brink. And that's Nick Carter and Matt Walsh, and they're legends themselves. And Matt Walsh was talking about their thesis the other day, not their thesis, their criteria. And their criteria was very similar to that of Techstars. And their criteria are people, market, product, valuation. Okay. The Techstars criteria are team, which is people, right? And then team again, and then team again. So the first three are team. And then it's market,
which tells a lot.
Traction, right? Which has a lot to do with your product. Okay. And then instead of valuation, because we invest at the same terms across the board for anyone that comes into Techstars, it's idea. right? And again, which is mapped to the product.
Easy.
So we, it very, very similar. So that gave me some strong chutzpah to say, listen, this has all been going in the right direction. But in reality, Techstars has been very much going in the right direction for the last, 17 years.
Yes.
So the criteria there, again, team, market, traction, product. Team, market, traction, product, or idea, over and over and over again. And I probably had now, I don't know, 500-600 conversations with founders, if not more, maybe close to 700 or 800 with founders, where I follow that exact same recipe when I'm talking to them. Tell me about the team. Tell me about how you got together. What was it that made you decide that you wanted to build this together? Tell me about your backgrounds. Tell me about your experiences.
And what is it that you're looking for? So let's say, do you rule out a one man or woman show, which means there is just one founder?
We don't do that frequently.
Okay.
But we do that from time to time, where we meet a founder that we just believe in so much, and we want to invest in them, that that they've been able to make some progress with a number of different folks helping them out along the sides, and they perhaps have one person lined up to become either their technical co-founder or their commercial co-founder.
Yeah.
And that is something, and we need to also have a strong affinity for the market they're pursuing and the product that they're looking to deliver to that market. So it has to fit. It can't just be solo founder, wonderful, but then difficult market, zero traction, bad idea.
Yes. Okay. So you need to be a kind of A- in all 4 dimensions. You cannot be an A+ and then a C. And what about, so when you say early traction, so how do you measure that? Is it that they already have paying customers, or they have, I guess they have to have an MVP before joining, or is it even earlier than that?
We'd like to see an MVP, or at least strong progress towards an MVP. But a good example of traction is just truly understanding your customers. And the way that we look at that is we wouldn't, make them show us all their numbers. But if you're selling B2B or business to business, that you want evidence, you want to see that they've spoken to at least 30 companies, and that they've been able to validate through asking them the same 10, 15 questions that, yes, we understand what the market needs here. If you're selling B2C or retail or business to customer, that you want to be able to show evidence of at least talking to 100, and that you can speak to the market. Your traction and ability to execute is significantly enhanced by, have you had deep firsthand experience in this problem you're solving? Do you come from the market? Do you know this market inside and out? And so we can be impressed by a founder that has very little traction so far, because we can just see they've got the street cred there, that they know this space inside and out, and we can talk to people who can vouch for them and say, yes, they're going to move really fast because they know this space inside out. And that ideally, obviously, I'd say out of the 12 companies that come into an accelerator program, 11 out of 12 generally are a team, and that where they truly do have a CEO, a CTO, perhaps a chief product officer, perhaps a chief operating officer, a head of engineering. Generally it's 2 to 4 people is kind of the sweet spot for a team that we would bring into the program, that we would invest in.
It's fascinating. I have so many questions. I hope I'm not gonna hammer you with everything, but have they typically raised already when they enter the accelerator?
Some have, but most of them would have raised probably 50 to 100K at most.
Okay.
That would be a friends and family round. Or perhaps cobbled together a small, what they call a build round, just, 250, 350K, just to get things moving and to make sure they can start paying people. And some have even raised a couple million. And it really depends upon the stage that they're at. And that you catch a company in the midst of a pivot or in the midst of a big scale. Usually, this is pre-seed investing. But every now and again, we will get somebody who has already raised a pre-seed round.
Okay. And so I've seen for this year that you put a bigger importance on the hub. Like, my understanding is that it's important. You've realized it's very important that there is a local anchor, maybe a strong ecosystem locally where the team operates. Although I believe many of the teams are maybe global or remote. Can you elaborate on that? So why is it important, and is it a key criteria for you guys as well?
Yeah, Web3 is interesting, okay? And the way that I define Web3 is that it's the same way that Sam Williams from Arweave defines it. And I chatted with him about this when I was thinking about expanding my view of it a bit. And he said, Pete, no, just stop talking about VR headsets and fiber optic cables and all that stuff. Web3 is a protocolization of web services. Okay, imagine something that a company does online today as a web service that can be done by a protocol. Okay.
That's what you mean by this word that I cannot pronounce.
The protocolization.
Yes.
Yeah. I know. I've said it. Initially, it was difficult for me, but I've said it enough times now. But and included in
training.
that, included in this, obviously, crypto assets are built on protocols. Okay. You can look at that in some regard as some elements of crypto can be pointed to as a type of financial service, take decentralized finance or DeFi, and that it is protocol based rather than a company issuing a product or building a product, that it is a protocol that is running that enables financial counterparties to execute and trade. Okay. So that's one example. We have probably one of the oldest protocols out there, mostly replaced, but not entirely replaced.
Which one?
Snail mail, so email, right? Replacing people saying, well, listen, if I want to communicate with my sister, of course, I'm going to send her a letter.
Yes.
Right. Imagine that back in the 1980s. That's the way that you thought about things, or perhaps even the 70s, because email started taking hold in the early 80s, maybe late 70s. But email is a protocol. HTTP itself, and what followed after that, HTTPS, secure one, that is a protocol. It's a document protocol. Back in the Web 1 era where it was read-only, it was HTTP. That was a document protocol. So if you continue this thought, what is it that's done on the internet by a company? Take Amazon. That's e-commerce. Can you imagine e-commerce as a protocol?
Yes,
that
definitely
would eventually replace the need for Amazon to do what they do. And Amazon will be far beyond e-commerce at that point in their evolution. So that is the way that I think about it. And so I'm looking from a Web3 perspective at crypto, at decentralized finance, at digital collectibles, let's call them. And it's kind of repurposing the NFT space. But I mean, again, it's tokenization of things, tokenization of experiences. We're looking at those who are building infrastructure that enabling all of the Web3 value propositions to be delivered more seamlessly and to close the gap in terms of things like security. We're looking at consumer apps, helping to onboard the first 1 billion users of Web3, whether they know it or not. And
so no proclivity towards only infrastructure. I felt like there was this emphasis on infrastructure, B2B, really building the building blocks of Web3 with your program, but you would also support, as you said, like a digital asset collectible project. Got it.
Absolutely. And so we've got this thesis about the way the world will work in Web3 and where things are headed over the next 5 to 10 years. But like I mentioned, this is all about people. If you find a great founder that's building something incredible in this space that others aren't doing, you want to pursue that with them and you want to invest there. But all of this is happening all over the world, obviously. And so there's no point in having one geographical focused accelerator program and investment portfolio that is just focused on one geographical area in Web3. Web3 is borderless by nature. It is global by nature. And so we set up the Techstars Web3 program to do just that. Although I live in Ireland and my investment principal, Hugh McGurr, lives in Ireland, we have our program manager, Chris Sicoli. He lives in New York City, and that we bring in mentors and residents and other folks to help during the program and to deliver value to founders and to really help them move quicker. Obviously, that's the point of the Accelerator program. And so we source founders globally. and that I think we've invested across 15 different countries now at this stage in terms of the founders that we brought into the program. And so
So it doesn't matter so much. Is that what you're saying? Okay.
Doesn't matter where they're from. Doesn't matter where anybody's from. I mean, that's the thing, great ideas come from all over the world.
Yes.
And so we bring the founders to Ireland for the first week of the program because I live here and Hugh lives here. It's easier for us, but Ireland's also a great place to build relationships because there's this real knack that the Irish culture have and people that come from Irish heritage have for just making connections with people. Yes. And that everyone always wants to connect you with someone they know in some way, shape, or form. So it's a great place to build those connections and just get people within each Techstars class that just talking to each other and figuring out what makes each other tick and figuring out how they can be helpful to each other. And that to also build the accountability between each individual member of a Techstars class and us as a team, those that are running the program. And so we do that here, and that we, again, the focus on the outside world is on, we bring in mentors from all over the world. We connect with investors from all over the world because, there's no boundaries here.
I love that. Pete, so I realize we haven't defined exactly what an accelerator is and what's the purpose of it. Would you mind giving us a short definition of what it is?
I'll let you help me with this. So you drive, Alize, right?
All right. Well, so for me, it's really to take, as you said, a pre-seed startup to the next level by helping them with areas that are outside of their core competencies, such as, I don't know, hiring a team, managing a team, getting the right legal infrastructure, of course, finding funding and getting access to a much larger pool of mentors, investors, and
Very well done. Very well done. What I was trying to do there was to say, I was asking you if you drive, and that there is something in the car when you're driving that's called an accelerator. And when you put your foot on that, you go faster. Right?
Okay.
Got it. But you nailed it there in terms of the way that you're talking about.
I'm going to drive the definition.
Fantastic. Fantastic. But that is it. You want to get them moving faster.
Yeah.
And so Connor Murphy, who used to run the Techstars SAP.io program in Berlin for a number of years, talked to him on Money Never Sleeps last week. And he said, the Techstars managing director is like an API for your network. So you plug into me and you plug into the team and we open you up to a whole new network. Okay. And it's those connections, and we're super connectors. Those connections make people move faster. Yeah. I'll tell you how. So that first week of the program, as I mentioned, we're building relationships. We're getting everybody together, trying to focus on experiences rather than content. But obviously, we're going to have some content there to set expectations for people. But then week 2 and 3 is what we call Mentor Madness that you participated in last year, Alize. And that is where we're going to have the 12 founding teams engage with around 50 mentors. And we're doubling down this year on mentors who have built in Web3, built product in Web3, those who have sold in Web3, and those who have fundraised in Web3. And those are the 3 skills that we're really after.
Critical skills. Yeah, exactly. To help navigate. Yeah.
So it's a 2-week process. The founders are completely wiped out at the end of it. And that they'll have had these 50 conversations, which are 20 minutes long, over in 3-hour blocks across 9 days. And each mentor picks 4 companies out of the 12 that they think that they would like to work with. And then then we pick 3 for each one of the mentors. So the way the numbers work out is each founding team ends up speaking with about 50, as I mentioned. And what that does is one of 2 things. Either the founders get through that process and the majority of their assumptions around the direction they're heading and the pace that they're going, that they're confirmed. A few of the companies end up, wait a second, that doesn't work. Not all the mentors, but the majority of mentors were like, wait a second, you're going in the wrong direction here. And you kind of drop back down a level and say, we've got to redo our customer discovery, which is going out and talking to those 30 B2B or those 100 B2C to say, what is it that we're really looking to do here? And you have to do that again. Maybe you haven't done it before, but part of the getting into the program is kind of providing evidence that you have, and that it's a lot better to have that experience in the cozy confines of a Techstars accelerator than it is out on the street on your own.
Exactly. Yeah.
And so we help to bring them back. And that's pretty much month one of the program. Month two of the program is for those that are in the majority sense of, listen, we just need to move faster. That network that we've just plugged you into of mentors, you end up working with 3 or 4 lead mentors. That just naturally, through those mentors helping you with the things that you need help with, whether that be building your product, whether that be getting your fundraising strategy figured out, whether that be getting your sales and partnership and user acquisition strategies figured out.
In my case, that was one of the biggest areas, is to get introductions to, key customers they wanted to reach, etc.
Exactly. And it's, lots of the mentors are super connectors as well that we bring in, because when I am talking as a mentor to a founder, you have to be honest. And if you don't know something, you can't just babble your way through it. You need to actually say, listen, I'm not sure about this, but I know someone who does. I know someone who really knows this well. And you make 1 or 2 introductions, and you then get that feedback from the folks that you've introduced those founders to that kind of gives you even more insight into what they're thinking. And it works really well. And on the other side, for those founders that are perhaps in a circumstance of, listen, we've got to start over again, not start over completely, but go back to the drawing board a bit.
Shift or pivot their idea.
Like there was a company that went through the Techstars ABNM program that I mentored on between programs last year. And they came into the program as blockchain-based startup crowdfunding. And after Mentor Madness, they became a tokenization platform for e-commerce loyalty programs.
Wow.
Completely different. But what they figured out in Mentor Madness was that, all right, we've built a pretty good platform, but we're probably going after, based upon all the feedback, probably going after a little bit of a different market that may not be the fastest moving one. But they said, all right, well, where are your relationships out there in business? Well, a few of us come from an e-commerce background. We've got a lot of good relationships there. Okay, well, let's think about something we could do in that market, because those relationships will unlock tons of value there. Again, earliest stages of a business, it all comes back to people. You as a team and the relationships you have with people around the world. The 3rd month of the program is really about fundraising, and about getting ready for fundraising and pitch practice and acting lessons and all these different types of ideas, getting your pitch refined 20, 30, 40, 50 times, pitching to anybody, pitching to the mirror, pitching to your dog, and just getting that right so you can have that stage presence and that ability to basically tell your story in a minute or less. And they talk about it being an elevator pitch, but it's really, it's short. 15 seconds in an elevator, right? Is kind of what you really want to be able to get across.
It's insane how much you need that in every aspect of your life, actually, to be able to connect with someone immediately over a few seconds. So okay, very cool. So at which stage, Pete, do you then make the decision to invest, or is it automatic that Techstars will invest in the company?
It's automatic. Okay. So
as long as you're part of the program.
As long as you're part of the program. And so all and that's kind of one of the things about Techstars is that if I were to be making 12 investments a year as a traditional VC, I'd be doing that once a month, right? Maybe not equally spaced out like that, but that would be how it averages out. When you're doing it with Techstars, that you're making 12 investments in 8 weeks. So even though you start the application period in September and then close the applications in November and start interviewing founders in December, you're realistically talking to some of the founders back in October, November. And so you have a little bit longer of a lead time, but it's really the crunch time of December to interview all those founders. So when you get to January, you can get into your all of your due diligence. We connect founders with VCs to help us kick the tires, mentors to help us kick the tires, put them through an investment committee, all different types of requirements. And at that point is when we make an offer, usually by the end of January into early February, to say, we would like to invest up to 120K in your business. And that, do you accept the offer? And most of the time they say yes. Some of the times they say no.
But okay, because how much equity? Can you then, okay, so it's up to $120,000. How much equity do you get for that
The
typically?
equity is 6%. So
Mm-hmm.
that's how Techstars end up on the cap table, but it's a very unique deal. The
Mm.
investment, um, the investment vehicle is basically a convertible equity agreement.
Okay.
And there's also the option to do the convertible loan note.
Okay.
So
What's
it's
that
split.
for
So
those who listen to us?
yeah, so convertible equity agreement, the way it works is that we say that the cost of the program and the cost of having me and Hugh McGurr, my investment principal, on their side of
Mm-hmm.
the table for life
Yes.
is 6% of the equity. And or
Invaluable.
what works out to be about 1.5% of their token supply if they are going to launch a token. And that it's not just Hugh and me, it's the whole Techstars network and having all of that at their disposal, the full 13-week program, everything that goes along with that, $3 to $4 million worth of perks from AWS, from Stripe, from Brex, from a number of different other network partners that Techstars have in place. And that when this is something that has been in place with Techstars for the last 17 years, and it's been the same deal for the most part. It's changed a little bit. So the convertible equity agreement works in that once after the program that the companies leave and they go on to raise money,
Mm-hmm.
once they raise 250,000 or more in a what we call a priced round, which is where the founding team agrees to sell a certain percentage of the equity of their company in return for cash. Okay. Techstars then enter the cap table with 6%. So we become a shareholder only at that point in time. And because Techstars invest with the founders
Mm-hmm.
and invest alongside the founders, the Techstars receive common shares and not preferred shares. Preferred shares are usually what are negotiated by venture capital firms later on downstream with specific rights that each founder should read a book called The Secrets of Sand Hill Road by Scott Cooper from A16Z, or probably the biggest and most well-known one that we give to all Techstars founders is Venture Deals by Brad Feld. So that is something that where all of these terms are explained and to see how it works. The other part, and that for that first part for the convertible equity agreement, we just also give the founders $20K just as a stipend, more or less, because they're going to have some expenses traveling during the program, and up to 3 or 4 people can take part in that. The convertible loan note is we give them $100K technically as a loan, but Techstars then have the option to convert that into equity or tokens in the matter of Web3 companies at their first priced round again. Okay. So when they do enter the point of, usually it could be at their seed round, it could be at their Series A even, because some companies may not even do a price round at their seed round. They may decide to use a document called a SAFE, a simple agreement for future equity, which is very similar to a convertible loan note in terms of how it operates, but which means that you're saying, listen, the investor will give you $500,000 and will receive equity at a point in the future when there is a full round of fundraising raised where everybody wants equity. It's a promise almost to say that, yes, it is a simple agreement for future equity, which is very similar to a convertible loan note. So,
do you find that founders typically are very well versed into deal making? Because it sounds that it's, from what I've seen, not typically a strength. It's really a skill that you acquire with experience, etc., having done multiple deals in the past.
Yeah, a lot don't. And that we typically see this as well as coming out of the corporate world, where you see founders that have worked in the corporate world for a while and they leave very well prepared and perhaps well financed themselves with a little bit of a nest egg with saved up bonuses through the years, that they get a business off the ground, they build a product, but they just don't have any fundraising experience whatsoever. And all of these types of technical concepts are really difficult to become familiar with. And so that's where Techstars can really help, is that I personally run a fundraising session over 3 different sessions that bring folks through and give them the deep dive into how all of this works and how to leverage your network to help you connect with the right investors. And so there, yes, to answer your question, Alize, there needs to be a lot of education around fundraising
for
in
sure.
the Techstars program.
Okay, that sounds great. Yeah, otherwise you run the risk of making really bad deals that can also kind of kill the future of your company, I imagine.
Absolutely. Yeah. And I've seen founders that someone was offered, okay, we'll give you 2 million for 50% of your business. And it's like, what? One, all right, fine. That's a 4 million valuation. Okay. Which is, if it's at the pre-seed level, that's actually decent. But the fact that an investor is looking for 50% of it means that you completely kill the cap table, as you say it, right? And that how could the founders be motivated to do things down the road if 50% of their company is already gone at pre-seed level? Forget about it.
Yeah, it sounds insane. Yeah, for sure.
Yeah. So we've got it, that sometimes you have founders just so hungry for money that they think about that and probably don't really think about that, and they end up taking these bad deals. So you need to help them stay away from those things.
Not under your watch.
Exactly.
Wonderful. So I think a lot of people would like to know, at least I would like to know, now that you're running into your third year, do you find that there is a fundamental difference doing this accelerator program in the for Web3 versus traditional, all other accelerators that Techstars do? And if so, what is the difference?
It's the network. You just need the network in Web3.
Okay.
You need
much more than in traditional industries.
In traditional, what you see across a lot of accelerators, obviously including Techstars, that where there are generalist accelerators that will invest in businesses from across all different segments. There are specialized ones, but the thing is that you're going to find a lot more VCs, you're going to find a lot more investors in what we call Web 2 than what you call Web 3. So they just have a bigger pool to draw from when it comes to investors. Raising money is hard no matter in what segment you're going after. But to know that you have to build this mentor pool as a Techstars managing director, you have to build the investor connectivity, that you really need that specialized skill set in Web3. There's just horror stories I've heard about people talking to Web2 VCs or, VCs that don't invest in Web3, and that where, listen, the VC says to them, can you explain blockchain to me? If you get that question, you're in the wrong room.
Yeah. Okay. So there is no point evangelizing in your view. Okay.
No, because
you don't have time. So you
don't, and if you have to convince an investor about the merits of crypto and that, looking at Bitcoin and Ethereum as representative of all of crypto, it's not. 99% of the crypto assets out there just will become totally irrelevant in the future. If you look at the top 10 crypto assets, you've got something like 95% of the market cap there. And that those will be the stalwarts of the future. We'll see more come in. We'll see some of those top 10 disappear. But if you have to have that kind of conversation with an investor and try to convince them on this, forget about it. You're just not going to get anywhere. You want to be talking to investors that have invested in this space or actively investing in Web3, and that have a view of the world and that will be helpful to you down the road or helpful to you right now. And so having that specialism is really, really important when you're running an accelerator program. And so that, to me, over the last couple of years, I've seen that really, really come out, and that, and just as the network grows and as we build more relationships with mentors and investors, it's just going back to talk to the ones that you really feel that you built a bridge with and that your founders built a bridge with, staying in touch with them and seeing what they're investing in. The worst thing that I can do is take this table of 12 companies from our current cohort and then just blast it out to everybody. No, you do this in an artisanal way. You connect with people.
Yeah.
You find out what's going on, see what they like, see what they're interested in, and say, hey, listen, here's 2 or 3 that I think you'd really like. And so some of the biggest lessons learned for me, even though I came into Techstars with some good connectivity with investors. It was, you need the right ones, and you need to build those bridges. And, I think that's the big difference we make, is with, in particular on the mentor side, in particular on the investor side. And just that we've always taken this approach of Web3 is small, as I mentioned, in that, there are 20 to 25 million at best. I think it's monthly active users of MetaMask, Coinbase wallet. And then you get the whole CeFi side the centralized exchange side of it. And you take the number of crypto addresses, you're quickly up close to 500 million. But really, in terms of daily active users that are open to using Web3 propositions, it's a very, very small market. And so if you want to grow in Web3, you need to be able to sell to Web2. You need to be able to onboard people into this space without them not even knowing it. There's nothing dishonest about that. It's just that you've managed to place blockchain and crypto into the background of everything you're doing, because it's really not that important. It's just a technology stack that you've decided to build on to deliver your value proposition. And so that's where we really try to influence people, so that you should be able to pitch your business to Web2 users and customers. You should be able to pitch your business, your fundraising proposition, to Web2 VCs and Web2.5 VCs. If you get in that first 10 minutes, hey, tell me more about crypto, you're in the wrong room though. You should never have to be in that position though, because you should have done all your research. We really push people to research their investor pipeline in the same way that you would research your customer pipeline. You're going to go out and try to figure out who you want to have as your user group. What's going to be the optimal user group to bring on first into your product? How are you going to acquire those users, whether that's retail or it's business? You're going to take the same approach with fundraising.
Isn't it the same actually for your end users? Because I imagine, in my view, as you say, right, there's no point in the first 10 minutes. If someone tells you what's Bitcoin, there is a bit no point when you're raising money. But same goes for your user. If you should you at this stage, where the technology is still quite immature, really try to get users that literally do not understand or have zero interest into crypto and Web3? No.
I mean, you're going to start with, the lowest hanging fruit. So we had a company in the first program, Crowd Class. They pivoted since the beginning, but they were originally looking at kind of a decentralized learning platform for online learning. So to replace people going to these different paid platforms
like Udemy, Coursera.
Exactly. Thank you. And they were going to distribute the whole process of creating the content for educators, the delivery of the content for educators, and the actual student and learner incentivization. And their first proposition was to go out to those who are already providing Web3 type training. So go to the market that and go to the market that we're
the early adopters before we cross the chasm.
Exactly. And I can see that bell curve in my head as you're saying that, Alize.
We all learned it, isn't it?
Absolutely.
Yeah, and I think it's very, very true. And when you don't have that solid base that is enthusiastic and is going to use your product, then it's much more difficult to go to the mainstream public. Very good. I see that we are almost at the top of the hour. I don't want to keep you too long, Pete, but it's so interesting. I would love to hear, looking ahead, what is then, so you've worked with dozens, if not hundreds or thousands of startups. What is your favorite narratives or emerging narratives that you think are promising? And what gets you excited still?
I think it's, for me, it's as I kind of said before, the protocolization of web services, and why this was important for me to pursue and why I still see it as interesting is that this space allows me to cover a lot of different areas and a lot of my different passions. So I'm a big sports fan. I'm a big music fan, and I can see the application of Web3 to those two areas, in addition to everything that's proposed around, and that is being done around the financial elements of life. And so in very little other industries do you get this coverage. And that said it before, probably way too many times on podcasts and other things, that it was the book Ready Player One that opened my mind up to this a bit, even though it's kind of a bubblegum pop version of Web3, and the movie definitely represents it that way. But I just saw a future in the year 2045 that was where humans had the option of living a part of their lives virtually. Now, in the depiction of that book, it was in a dystopian environment, which is hopefully one we're not headed towards. I'm always the optimist, but and I think that's it, is people having the option to live in the virtual world, and not too much, because that'll just end up wrecking your whole life. But that where I saw it, and it's really about value exchange in the virtual world, and that blockchain is an incredibly good foundation for value exchange in the real world as well, but in the virtual world where you're making decisions by moving your hand around, with looking through either a VR or AR headset, that you've got this whole opportunity now to just to be able to create this trusted relationship between people that you meet in the virtual world, companies you meet in the virtual world, to be able to exchange in commerce and exchange in trade.
So it's this ownership layer that gets you excited. The fact that you can own digital assets, trade them, and that opens up a lot of different, market and economic opportunities that didn't exist before. Is that?
It does. It does. Very well said. And that, there are, the tokenization of real world assets is something that I am very much a big fan of, and that I'm pursuing. I'm also looking at the intersection of blockchain and AI, artificial intelligence, and seeing the real power play that can be put in place by plugging those two together. And that if you imagine a world where, I heard it described even yesterday as AI to AI, and that where you just have these autonomous agents that are doing business for you, and that you will want to do that based upon smart contracts, which is if this, then that, right? If something happens, then another event is then triggered, and having that all secured cryptographically is the way that I would like it to be served to me. And so I see that as a very, very interesting area, and just the overall proliferation of crypto assets and the wider acceptance and the killer use case of stablecoins is something that's very important to me and that I'm pursuing. And that we've got a big opportunity here. Most of the folks that come from the US, that they're like, well, the US dollar, we can just move it so easily. US economy is still heavily dependent on cash, but in other parts of the world, yes, cash is a huge thing, but also inflation is a big thing. And that the devaluation of your currency is a problem, and having your savings in a local currency is a problem. And so let's just make it possible for the whole world to be able to move value, and to do so in a trusted currency. Exactly.
Yeah.
Exactly.
Yeah, and that's where you see the organic adoption. Like nobody needs, if you go around Istanbul, you see a lot of crypto ATMs everywhere, and adoption organically picks up in, as you said, in areas where the currencies are, inflationary, with high inflation.
Absolutely.
Very cool.
Absolutely.
All right. That's wonderful. It's been a truly captivating exchange. And thank you so much, Pete, for sharing your wisdom and experience with us today. Before I let you go, I know our listeners would love to know, how to follow your work and Techstars' journey in Web3. So where can they go to follow you and Techstars?
Yes. So our Techstars Web3 Accelerator page is on techstars.com. And if you just Google Techstars Web3, you'll get there. And we also have as you might imagine, on LinkedIn and on X, that's the first time. No, I won't even say the other name now. I'll just say X, because it means I didn't do it.
We need to get used to it.
So I'm at Pete Townsend NV on X. I am Pete Townsend on LinkedIn. I just got onto Farcaster, which is a pretty cool platform, just last week, which is decentralized social media, and I'll leave it at that. And
very cool.
That also with Money Never Sleeps, that I've restarted the newsletter. So we've had the podcast now for 5 years. The newsletter was on again, off again. I restarted that and I'll be sending out updates on the Techstars Web3 Accelerator through the newsletter as we get into the program. And that comes out twice a month generally. So that is probably
Wonderful.
one of the best ways to follow what's going on with the Accelerator program. I also have my own musings in there and a bit of writing. Did something comparing the restaurateur, Danny Meyer, and his mantra of always be collecting dots so you can be connecting dots. And so ABCD, as he calls it, and compare that to startup investing. So
Beautiful.
Every now and again, I get inspired by something I hear on a podcast and want to go do a bit of writing rather than just doing the, doing it this way.
Yeah.
And that, so I do get inspired to write every now and again. And so I'd like to use that as a vehicle for sharing things with the world as well as the podcasting.
Wonderful. So I'm sure today a lot of our listeners will be inspired by this chat. At least I hope so. Thank you so much for your time, Pete. And we'll be sure to subscribe to the newsletter.
Wonderful. Thank you, Alize. It's been wonderful talking about these things with you, and I look forward to our next chat.